Yes, we're live. Welcome to Sunday's live stream. It has been a while since I did one of these. I was on vacation, but I'm back now and ready to do another episode of a Sunday's live stream. Let's wait for a minute or so, just in case someone is late. And we also want to do a quick audio test. Okay, so without further ado, let's begin. It has been quite an exciting few weeks. I see there is a lot of fear in the market, and especially in the crypto market and in stocks, risk assets in general. But as we will see in a moment, our wave counts suggest hope is not lost. So I remain overall bullish in 2022, and a low should be near. Okay, so now let's jump into further details, starting with the US 10-year yield. As we know, rising yields usually suggest that financial conditions are loose, which should be bullish for risk assets in general, but we also want to see confirmation from the dollar, and specifically we need to see a weakening dollar to ensure that financial conditions are loosening, which has not been the case thus far, but as we will see in a minute, our wave count suggests that the dollar should be nearing a top. Okay, so specifically for the US 10-year, I have been tracking this 5-wave rally since the start of the new year, and we have been successful in calling this correction in wave 4. Although we looked for a triangle, we ultimately expected yields to climb to new highs to complete wave 5 and thus intermediate wave 3. Instead, however, yields completed a zigzag, but nevertheless, we got the rally to new all-time highs we were looking for, and wave 5 achieved equality with wave 1, which is a common wave relationship. So far, there is still nothing to suggest a high is in. However, we are vigilant for a temporary top, a peak in wave 3, and ideally a downside correction in intermediate wave 4 as we head into Q3. Wave 4 in blue should revisit the prior fourth wave low near 2.7% before the next impulsive rally begins. Excuse me, there is some background noise, unfortunately, but we have to work with that. Okay, so where I was. Yeah, so the correction in wave 4 should take about a month or month and a half to unfold to be proportional to intermediate wave 2. And until we get a downside break of the channel, of the ascending channel formed by wave 3, the prospect for more upside activity remains intact towards the Fibonacci cluster into the 3.77 to 3.9%. Okay, so as we discussed, now let's take a look at the euro dollar. We need to see the dollar weaken to be the environment to be bullish for stocks, and thus far we have yet to see any signs of a low in place, so the prospect for more downside activity towards this background noise is killing me, but unfortunately, so the prospect for more downside activity in euro dollar remains intact. I think we can adjust that. Let me see. Okay, sorry about that. Someone decided to chop wood uh, during our live stream. But okay, so let's continue. So the prospect for more downside activity in euro dollar towards the $1 handle remains intact. I view, but overall, euro dollar should be in its very early stages. The downtrend should be in its very, very late stages. And let's zoom a bit to examine the internal structure of wave C. So wave C is a post-triangle thrust where wave 2 is sideways on expanded flat and wave 4 is sharp a zigzag. This satisfies the guideline of alternation. Okay, so within wave 5 in red, I'm tracking a developing fifth wave that should achieve equality near 1.01. So this zone is our ideal bottoming zone, and once achieved we will begin to watch for a bullish reversal. This should coincide with a bullish reversal in stocks and crypto. Okay, so now let's take a look at the S&P. This is SPY. This is the ETF that tracks the S&P, and I'm using it because it somewhat displays a clear pattern when compared to the actual S&P. So we will work with this for now. The recent drop I view as wave 4, which is quite a sharp decline, which I view as a zigzag. And wave 2 was, as we can see, a sideways correction on expanded flat. Again, this satisfies the guideline of alternation. Wave 4, I look to bottom out near the upper trend line of the base channel formed by waves 1 and 2 and the 50% retracement of wave 3. The intersection point of the upper trend line and the 50% retracement level comes in at about 350. And once wave 4 is complete, we should see a rally to new all-time highs. The reverse 1.382 multiple projected from the 350 level comes in at about 530. So this is our upside target for intermediate wave 5. Okay, next up is gold. Okay, so gold. We are still maintaining a bullish wave count, but wave 2 got deeper than expected, about a 98% retracement of wave 1, which is not uncommon, but I would typically like to see wave 2 to retrace a typical 62% of wave 1 before the next rally in wave 3. So far, the rally is arguably impulsive from the low, but as long as the latest low remains intact, I look for an upside break of the corrective channel formed by wave 2. The upper trend line comes in at about 1880, so an impulsive break above this level would begin to suggest wave 2 is complete and prices are turning higher in wave 3 of 5. The Fibonacci cluster into the 22, 25 to 50 area, comprising the reverse 1.8 1.382 multiple of wave 4 and the 1.618 multiple of wave 1 is a reasonable upside target. Going forward, look for a 5-wave rally towards the reverse 2.0 multiple at 24.71. Okay, so I think I missed dollar pound actually. So before we take a look at some crypto, I want to also make a bearish case for the US dollar by looking at the pound in its wave structure, which is quite bullish actually. Zooming out on the weekly, we can see a completed 5 waves down, an ending diagonal into the 2020 March low. This is about a 13-year ending diagonal, and the guideline for ending diagonals is that they should be resolved in less than half of the time they take to unfold. So basically this wave count calls for sharply higher prices towards the $2 handle and above in the next 6 years or so. And we can also take a look at the actual dollar, the dollar index, which is a basket of the major currencies like the euro, the pound, and the yen. So here we also see a bearish setup for the dollar. Since the global financial crisis, the dollar has traced out 5 waves up, and the recent sharp rally is typical for a post-triangle thrust. The Fibonacci cluster at 108 to 109 dollars is an ideal topping zone for primary wave 5. Once wave 5 ends, we should see a multi-year correction, a downside correction back towards the prior 4th wave low near 89 and the wave 4 extreme at $88. So this should be, as I mentioned earlier, bullish for risk assets in general and bullish for the euro dollar, the pound, and other commodity currencies. Okay, let me see if I missed something. Okay, so after gold, let's now take a look at silver, and after that the commodity sector. Okay, so not much change since our live stream in silver. Here I'm tracking a flat correction for primary wave 2. This is maybe an almost a 2-year sideways correction in silver, which is quite frustrating for gold and silver investors. So okay, the recent decline below $22 satisfies the minimum downside expectations for wave C, which can be labeled as complete near $20. However, to establish a tradable low is in, I need to see some upside acceleration towards the $26 handle, the wave B high, and preferably above. This would provide strong evidence that primary wave 3 is in its early stages. Primary wave 3 will achieve equality near $53 projected from the recent low. However, until we see some conclusive evidence that wave 2 is complete, we cannot rule out a deeper decline in wave 2, in which case the Fibonacci cluster near 19/89 $18 should be strong support on further decline, if any. However, I want to mention that if we get a confirmation in gold, silver will most likely follow to the upside. So we are definitely watching closely these two markets because they will provide a great opportunity in mining stocks. As you may not know, minor stocks, provide a 3 to 5 times a leverage. Instead, if we are trading the base metal instead. I have done previously a live stream discussing the wave counts in silver and mining stocks, so you can check our previous live stream for the wave counts where I go into more depth and discuss the huge upside potential in this sector. Okay, so now let's take a look at the agricultural front, or the food ETF as I like to call it. So the focus here remains higher in a third of a third impulse wave. Since our last live stream, prices have traded mostly sideways. Structural support is clustered near $21, and I expect this support zone to hold as we look for further upside activity towards $24, where wave 3 would achieve a 2.618 multiple of wave 1, although a solid break above this level likely then targets $28, the 4.23 extension of wave 1, and ultimately I look for intermediate wave 3 to play out as a 5-wave sequence and achieve a typical 1.618 multiple of wave 1 near $31. Okay, so now let's take a look at the energy sector. Okay, so I have opened the chart of crude oil, the daily chart. Let me see first if I missed something on the weekly. Okay, so our intermediate term target lies at $204, which is the reverse 1.32 multiple of the entire bear market from the global financial crisis. However, let's zoom in, as oil is likely to see further weakness short term. Prices overall remain locked in a sideways range. Here we have two options: further sideways to down activity to complete either a triangle for wave 4 in purple, in which case prices will hold above $95, or a slight dip below this level to complete a flat. This would satisfy the guideline of alternation, because triangles and flats are sideways correction, and wave 2 in this case was sharp of a zigzag. So ultimately, once wave 4 ends, prices should resume higher to complete 5 waves up for minute wave 3, which would achieve a 4.23 extension of wave 1 at $145. Okay, so now let's take a look at natural gas. Okay, so here we have somewhat a similar setup where I expect further sideways to down activity short term to complete either a triangle or a flat correction for intermediate wave 4. I expect this correction to unfold until early August. This way, wave 4 would achieve equality with wave 2 in terms of time. Again, we are looking for a sideways correction since wave 2 is sharp, a zigzag. The guideline of alternation states that when wave 2 is sharp, wave 4 should be sideways, and vice versa. So far, the 38.2% retracement is acting as a near-term support, and I expect it to hold as wave 4 continues to unhold. This is a typical retracement for fourth waves. Okay, so let's jump finally to crypto, which is maybe the most commented market at the moment, since crypto has been crashing down for the past maybe 6 or more months actually. So although it looks bad, the wave structure still suggests that the ongoing decline is largely a complex correction within a larger bull market in primary wave 5. So to maintain this bullish wave count, I want to see channel support near 16,900 hold, and a break above trendline resistance near 35,900 would be an initial bullish sign that wave 4 is complete and prices are turning higher in intermediate wave 5. Wave 4 is not a common shape. I view wave 4 as a complex correction, a double tree, where wave W is a flat, which was then followed by a sharp zigzag rally in wave X, and then another zigzag, downward zigzag for wave Y. So in order for me to remain bullish on Bitcoin, I need to see channel support hold, and I need to see prices form a low near 16,900. And a reasonable upside target for intermediate wave 5 is the reverse 1.382 multiple near 97,100, which is currently projected from channel support. Okay, and it's not going to be our typical live stream unless we mention XRP. As you may know, this is one of my favorite altcoins. Here we have showed a triangle potential in XRP for wave 4. However, with the recent decline, this was negated. So I'm back to a bullish setup, of course, but I'm tracking a couple of 1s and 2s from the March 2020 low. And this wave count requires a bullish reversal from nearby levels. There is a Fibonacci cluster into the 0.29 to 0.25 area. Within this zone, we need to see a strong upside reversal and a break above the corrective channel formed by minor wave 2 to establish that wave 2 is complete, and a strong move higher in a third of a third impulse wave is in its early stages. The break of the channel currently comes in at about 70 cents. So a forceful and impulsive break above this level would begin to suggest that a tradable low is in. Our targets, we have targets lying initially at $12 and then $30, which is the 2.618 multiple of wave 1. However, before we get too excited, we need to see a solid upside break of this corrective channel, as I just mentioned. Okay, let's continue. I want to highlight an interesting opportunity. Besides gold and silver stocks, uranium stocks also present what I think is a great long-term opportunity. But before I jump into more details, I forgot to mention that nothing in this video should be considered as trading advice. Do your own research before committing capital towards these crazy markets. Okay, so this was the disclaimer. So now let's return to uranium. This is the URA, the uranium ETF. So the setup here is 5 waves up from the March 2020 low, and then a complex correction from the top, a double zigzag. Wave Y is somewhat in its late stages, as wave C will satisfy the minimum downside expectations by reaching the 0.618 multiple of wave A at $18. However, a more typical retracement for this entire correction lies at $16, which is the 62% retracement of this entire rally. And a bit below this level is where wave Y would achieve equality with wave W, which is another common wave relationship. So this zone is our ideal target and our ideal bottoming zone. Once this correction ends, I expect a sizable and a multi-year rally in uranium stocks. Okay, so now let's jump into some subscriber questions. A subscriber again asked about copper. So if you watched our previous live streams, you know that we have been bearish short-term on copper, specifically in wave C of this downward flat. And since our last video update about copper, prices did came down, which is in line with our short-term bearish forecast. A decline below $4 would satisfy the minimum downside expectations for wave C, although a ideal target and bottoming zone for wave 2 is the Fibonacci cluster into the 3.5 to $3.04. And once this correction ends, we should see a sizable rally in a third wave. Okay, so before I continue with the Q&A, I want to go back to this chart of the S&P versus the GDX, which is the gold miners ETF. As I mentioned a few minutes ago, I see a very bullish opportunity in miner stocks. in silver and gold stocks. So this is another chart that supports the bullish forecast. The wave count basically implies a decline towards the $96 handle in wave E, or possibly lower. We have the 78.6% retracement of this rally at $96, and trendline support currently comes in at about $75. So essentially, this decline means that the GDX, the gold miners ETF, should outperform the S&P. And given the wave counts I discussed earlier, it should outperform, GDX should outperform the S&P to the upside. So in the next rally, the GDX appears to be a better place for our capital. Okay, so now let's continue with the next subscriber question, which is, the symbol is HRHO. This is the Egyptian financial group, Hermes Holding Company. This is the weekly chart, and this appears to be somewhat a straightforward wave count. We have some missing data here, but I assume that this is wave 1 of a larger ongoing 5-wave rally. So, since the global financial crisis, prices here have remained locked in a sideways range, a barrier triangle, as I have outlined with the black trend lines. So short term, I expect weakness, a 3-wave decline towards the $9 handle, which is the 0.618 multiple of wave C. Alternate waves in a triangle are often related by the golden ratio. So this 3-wave decline in wave E should complete a long-term bullish triangle for primary wave 4 and set the stage for a strong rally to new highs towards the 92 handle. So this is a reasonable upside target, although wave 5 can travel beyond that level. This is again one of my favorite measurements. This is a reverse 1.382 multiple of the entire decline from the top. Okay, so in a nutshell, I expect weakness short term, but ultimately we should see rally to new all-time highs. And let's do a quick exercise. I want to extend the trend lines of this triangle. And the intersection point is called an apex of the triangle. So yeah, but it comes too far in time. Usually the apex of the triangle shows when prices should climb to new all-time highs. And given how long this triangle took to unfold, about 18 years or so, we should see a multi-year rally in wave 5. Okay, so the next stock is again an Egyptian stock, and it's the Commercial International Bank in Egypt. Again, we are looking at the weekly chart to identify the trend. So Since January 2020, prices traced out 3 waves down into the prior 4th wave low near 40. However, the subsequent rally is arguably impulsive. This 3-wave decline satisfies the expectations. This is a typical retracement for a 4th wave, where prices come back to revisit the prior 4th wave low, and usually we should then see a bullish reversal in a 5th wave. So if we zoom in, we can label 5 waves up from the low, but we need to label a truncation, which I usually like to do only in retrospect. The subsequent decline is in 3 waves, which is corrective. Again, a good sign. Okay, let me just turn that off. Okay, so back to our stock. The decline is corrective. It's in 3 waves. However, it's more than 62%. It has retraced more than 62%, which again is not uncommon for second waves, but I need to see a return back above $51 to confirm this corrective decline. And until then, I'm hesitant to call a tradable low in place. The 50% retracement of primary wave 3 comes in at about 33. So it should be strong support if tested. Big picture, however, we should see a rally to new highs towards the 76 handle. Again, a reverse 1.38 multiple of this correction projected from the recent low. If prices break below it, we will have to adjust our target slightly, of course, since we expect the 50% retracement of wave 3 to hold on any further decline, if any. Okay, so before I jump to some individual stocks, I want to remind everyone to check our website at tradesign.com, where you can find interesting articles regarding the markets. We have covered the Russell, Apple, Litecoin. You can find interesting wave counts for almost every market. Also, you can check our Discord, where we also have almost every major currency, crypto, forex pair. We also cover global stocks, individual stocks, and as I said, you can find almost everything you need if you trade or invest. This should be of value to everyone overall involved in the financial markets. Also, if you like these live streams, you can buy us a coffee. Links are in the description below. And also, if you want you have any questions regarding the markets, you can also comment your questions below, and I will try to answer them in the next live stream. Okay, so now let's take a look at some individual stocks I have on my watch list. The first one is Nikola. So this is an EV company which was involved in a scandal. However, if we forget about the news and the media, the wave structure reveals an ABC decline with an ending diagonal in the C wave position. So this is one of my favorite trade setups, and gives me a potential trajectory going forward. Prices have potentially bottomed at a key zone near $4/$5. Near $5, wave 5 is a 0.786 multiple of wave 3, which is a common relationship in ending diagonals. And at $4.4, wave C equals the length of wave A. Again, another common relationship. Although this zone could be retested near term, the downside should be limited overall. To confirm a tradable low as in, I need to see an initial 5 waves up back towards the prior 4th wave high near $12, followed by a 3-wave corrective setback. I have outlined the ideal trajectory on the chart, where the 2-4 trend line, once broken, should then act as support. This is typical for breakouts where old resistance becomes support. Okay, next up is Alibaba. Again, here we had a decent decline, a very deep retracement, about a 90% retracement of this entire rally since 2015. I view this decline as a simple zigzag. I like my wave counts simple, and I usually try to avoid complex correction when possible. Wave C is extended, and the prior 4th wave high comes in at about $129. So I want to see some upside acceleration above this level to establish that Alibaba has bottomed and another multi-year rally has begun. Next up is Workhorse. This is another EV stock. Again, it has a similar setup, a very crisp 5-wave rally into the top at $43. Another simple zigzag from the top where wave B is on expanded flat. And so far prices have encountered support near the 62% retracement of this entire rally in the 1.618 multiple of wave A. This zone is a strong Fibonacci cluster and our ideal bottoming zone. Also, if we zoom in, we can identify a small bullish hammer formation. Notice this spike below the 1.618 multiple, and then prices reversed higher. So as long as the recent low holds, we look for an initial 5-wave rally back towards the $5 handle, and then a 3-wave decline to confirm a low as in. Like so. Okay, next up is JD, another Chinese stock. So the setup here is almost similar to that in Alibaba, where we have potentially completed a corrective setback a bit above the 78.6% retracement of the rally in wave 1. And short term, I look for a 5-wave break above the upper trend line of this corrective channel to confirm that a upturn has occurred. I have also some other EV stocks like Lucid, like Lordstown Motors, Xpeng that show similar patterns, but I don't think it's necessary to go over those as well. Overall, I am bullish on the EV sector and I look for confirming price action that a tradable low is in. And before we conclude our weekly wrap up, I want to take a look at a gold miner stock. This is Yamana Gold. As I mentioned earlier, I see bullish potential in this sector. So the weekly chart reveals a large degree bullish triangle from the top since 2012 until March 2020. And since after the triangle, prices ideally completed waves 1 and 2, and we are currently in the very early stages in primary wave 3. Primary wave 2 was close to about a typical 62% retracement of wave 1. If we zoom in, we can see the nice impulsive structure of the rally from the low, but very near term we are likely to see a test of the 62% retracement of this bounce before the next leg up gets underway. Overcoming the wave 1 high near $7 should add upside traction in wave 3. Okay, so this concludes our Sunday live stream. I want to remind you to visit our website tradesign.com and check our also Discord group, again TradeZine. Also like this video, comment your questions below, and support us by buying us a coffee. Links in the description box below. Thank you for watching, and I'll see you in the next live stream.